Oil Technical Analysis, August 15th, CommoditiesMansion.com. The light sweet crude market had a fairly neutral day on Friday as traders found themselves somewhat undecided on the future direction of this market. The pair is an interesting case study in a perfect bounce from the 80 mark, and we feel that the 90 mark is where it eventually wants to go to. Might be a little bit of pullback in this area, but quite frankly, oil does like to stay in about $10 ranges when it does this, and we suspect that that's probably its next move. On a pullback, we'd be willing to buy. Of course, we need to see a close above 90 to become extremely bullish of this market. It may just simply be a range trade for the range trade for the near term. And as such, we may get a little bit of pullback, and we'd be interested in buying 80, maybe selling at 90 on weakness, just kind of bouncing back and forth until we can come up with some kind of definitive motion out of that range. Looking at Brent, we see that it did fail in the sense that it didn't bust right through its first resistance area at 107.50, the first hurdle. We think it's a little bit of a pullback and probably a move up. It is a fairly significant resistance area, but the truth of the matter is if the CL contract, the light sweet crude, continues to push towards 90, more than likely this one will break above that and find a more significant place to perhaps range trade in. You can see that there are several levels ahead at 120, 112.50, 115, 117.50, and 120 that this could find trouble at. Basically, a doji is easy to trade in this particular scenario because you are really looking to see which end of the doji you break, and that picks your direction.